When you look back at the last decade in venture capital, there's this paradox. It's fascinating and honestly a little frustrating. We're seeing absolutely incredible performance from female entrepreneurs, but the funding they're getting, that tells a completely different story. So today, we're going to unpack that contradiction.
Let's just dive right in with a number that says it all. 2.5 times. That's how much more revenue startups led by women deliver for every single dollar invested, compared to companies founded only by men. We're talking about pure capital efficiency here.
And look, this isn't just a fluke, right? It's not a one-time thing. This is a clear pattern, backed up by years of data. Female founders are building these incredibly lean, high-impact companies, and they are delivering amazing results time and time again.
So just how strong is this performance, really? Well, the data is pretty clear. Over the last 10 years, women have proven again and again that they can build and scale massive, successful companies. Let's just look at the evidence.
Okay, check this out, because this is where it gets really interesting. We're looking at successful exits, when a company gets acquired or goes public. A decade ago, women-led companies were just 13% of those big events. Fast forward to 2024, and that share has nearly doubled to 24%. That is just phenomenal growth.
Now get ready for this next number. 7-fold. A 7-fold jump. I mean, that's a staggering increase, but what does it actually mean? What does it represent?
Well, it represents this massive leap in women taking their companies all the way to an IPO. Back in 2014, that was almost unheard of, less than 1%. Today, female founders are behind nearly 1 out of every 10 IPOs. That proves, beyond a doubt, they can build huge, venture-scale businesses ready for the public markets.
So, with all that incredible performance, you'd think the funding would follow, right? Well, that's where we get to the other side of the story. Because despite all these amazing results, there's a shocking reality that has barely changed at all. This is the heart of the paradox.
This number, right here, this is what makes it all so frustrating. Just 2.1%. After everything we just saw, the outperformance, the exits, the IPOs, this number it doesn't make any sense. It's a figure that's been stubbornly, frustratingly low.
Yeah, that's the slice of the entire venture capital pie that went to all female teams last year. Despite proving they can outperform, they are consistently fighting for the smallest possible fraction of the available capital.
And the worst part? This isn't a new problem. If you look at the data over the last decade, it's basically a flat line. I mean, sure, it goes up a tiny bit, it goes down a little, but it's always hovering right around this low 2% range. It doesn't matter if the market is booming or busting.
So this all leads to the big question, right? If performance isn't the problem, then what is? Why on earth does this enormous funding gap just persist?
Okay, so let's try to unpack this. The answer, as you might guess, is pretty complicated. It's not just one single thing, but really a whole collection of systemic hurdles that are just baked into the venture capital world. Research points to a few key things. First, there's this bias in what investors call pattern recognition. Basically, they subconsciously fund founders who look and sound like past successes, who, historically, have been men. Then there's the network effect. The whole system runs on warm intros, so if you're not in the right circles, it's tough to even get a meeting.
And on top of all that, there's a newer challenge. As PitchBook points out, the wider cultural pullback on diversity and inclusion efforts is being felt here too. When the market gets tough, some of these initiatives get put on the back burner, which makes it even harder for underrepresented founders to break through.
But okay, it's not all doom and gloom. The story doesn't end there. Let's move on and see how the landscape is actually starting to change from the inside, because there are some really powerful signals pointing to a much more hopeful future.
So what's driving this change? Well, one of the biggest game changers is who is writing the checks. A decade ago, only 6% of the decision makers at VC firms were women. Today, that number has nearly tripled to 17%. And more women at the table means different perspectives and new networks.
And you can see the ripple effect of that change in what women are actually building. 10 years ago, you saw a lot of female-founded companies in consumer brands or wellness. Today, women are tackling the world's most complex problems. We're talking AI, space exploration, autonomous driving, deep tech. The scale of ambition has just completely changed.
And that ambition, it's paying off big time. The momentum is just undeniable. I mean, look at this. 2025 isn't even over, and we've already seen a string of enormous, billion-dollar-plus acquisitions for companies founded by women.
This proves they're building brands that global giants absolutely want to own.
So that brings us right back to where we started, to this paradox. The data from the last decade is crystal clear. Female founders are delivering huge returns with just a tiny fraction of the available money. So the real question for the next decade isn't if they can build a future. It's what could they build if the funding finally, truly matched the talent. Just imagine what becomes possible then.